something like 45% of people said, of the sample said that their first ever investment was in cryptocurrency. And something like a quarter of the people who said that, they took out a loan, or they used a student loan, or they used a credit card to actually fund cryptocurrency investment speculation. It's kind of like, wow, cost of borrowing has gone up. Crypto hasn't really recovered from such a downfall that it happened after the pandemic. So not only are these people sitting on paper losses, but they have to repay the money that they invested.
Hello all, and welcome to the big interview on the Steps to Investing podcast. I'm Marcus De Silva. As crypto continues making news amid stories of collapsing exchanges, regulator lawsuits and marketing clampdowns, we're going to speak today to our regular contributor and Interactive Investor's senior personal finance analyst, Myron Jobson, to get the latest on the world of crypto, to try to unravel it a little bit and explore whether it is all actually just a big con. Myron Jobson, welcome.
Thank you so much for having me back on, Marcus. It's good to be back on.
It's good to have you back on. So let's start with the technology itself. Bitcoin, all those kind of different cryptos are underpinned by a bit of technology called blockchain. So what is this and why has it been so game-changing?
Yeah, well, it's interesting. I'll try to explain it in simple terms. I've seen so many online definitions online on blockchain, and I find them quite confusing. So let's hope this helps. So for me, blockchain is a decentralized ledger. So it's maintained by a network of computers where each transaction is, I suppose, meticulously recorded in a block. So these blocks are then linked together, creating an unbreakable chain of information. And so the core appeal of it lies in its immutability. So once a block is added to the blockchain, it's nearly impossible to alter or delete the information that's contained within it. So this immutability enhances the security and trustworthiness of the data stored in the blockchain. And also the transparent nature of blockchain also allows participants to verify and audit in transactions independently. And it's quite interesting because while blockchain gained popularity with cryptocurrencies, let's all say it's Bitcoin mainly, its potential applications extend far beyond that. So industries such as supply chain management, healthcare, finance, voting systems, which I think intellectual property protections are all actively exploring the use of blockchain to improve security and transparency and efficiency in their operations.
Okay, so this ledger could be used with, there's all sorts of applications for this particular ledger. Rather than a piece of paper, it is a digital ledger. And a currency is just quite a simple application. So it's probably why it started there. Would you say that's sort of a fair assumption?
Yeah, exactly. And it's security and transparency. That's the key appeal to it. So once a block is added to blockchain, it's nigh impossible, according to these tech geniuses, I suppose, to actually hack into it. And also you can double check you can verify the chain independently through different computer systems. I think those two elements are why it's so appealing.
Okay, interesting. And when did it start to take off as an investment? When did this really start to pick up gear as people really started getting into cryptos?
I would say 2017. That's when Bitcoin just exploded. I remember at the start of 2017, I think Bitcoin was priced at only a few $100, and it just exploded. And I think it hit $20,000 at one point. So that's just a significant uptick in its price, and with that, other people were looking at other similar products. So things like Ethereum, Ripple came out of nowhere and also exploded in popularity, with a lot of speculators hoping that yes, they might have missed the uptick in the price of crypto, but there are other similar products that also use blockchain technology that they could profit from. So 2017, I'll say, was the year where crypto really took off. And since then, crypto has had an interesting transition, I suppose. So during the pandemic, for example, it soared into new heights. So from 2017, things settled down significantly. It actually dropped to around £3,000 at one point, so $3,000 at one point. The price of Bitcoin dropped to $3,000 at one point. But during the pandemic, it saw another rise. And I have a theory, actually, Marcus. I think, during the pandemic, because of the enforced lockdowns here and abroad, a lot of people found time to actually just research things that they perhaps wouldn't research. And Bitcoin cryptocurrency was all the rage back in the day. You'll see it on social media, you'll see it in adverts, all those sorts of things. And so a lot of people thought, and especially people who became one of those accidental savers, basically they had more disposable income because they couldn't spend it on restaurants because restaurants were shut, or going to the cinema or theatre because theatres were shut. They found themselves with more disposable cash, and they thought, well, actually, perhaps I could speculate, not invest. I think that's a key word, speculate on cryptocurrencies in hope that I make multiples in returns that I've heard about on social media. And so I think that really did drive another peak in the interest of cryptocurrency, and not just interest, but also the price of cryptocurrencies. But again, that has come down significantly. So Bitcoin was touching $60,000 at one point during the pandemic, and now it's teetering just above $20,000 at the moment. So yeah, it's been a roller coaster ride for crypto.
Right, okay, so they had a bit more time on their hands, I suppose. They had a bit more money in the bank because of things like furlough. They'd probably kind of heard it, in the back of their mind, it was sort of sitting there because they'd seen adverts for it, and they sort of was aware that it was a bit of a trend. And then I suppose the market, it's sort of the breadth of it had grown. There were a lot more coins available, and would you say they were quite? I mean, you've mentioned that they were speculating. So would you say they were aware they were speculating? Would you say they were aware of the risks that were involved with buying these sorts of things?
See, I don't think so. I'll say categorically no. And the reason why I'll say categorically no in many instances is because agency like the ASA, that's the Advertising Standard, I forgot what the other A means, but the advertising watchdog. Let's just call it advertising watchdog, Marcus. And they reprimanded quite a few companies that have marketed crypto for just not making clear the risk that involves in cryptocurrency. Because let's be clear, there's no intrinsic value in these coins. All of it is just based on sentiment, and unlike traditional stocks. So I could invest in one stock and it might have property, so it has intellectual property, or might have property. There might be some sort of value that investors can hold on to say that, oh, listen, this is what gives it value. You can't say the same for cryptocurrency, and that's not really made clear, I argue, even now. Certainly not back during the pandemic, and as such, a lot of people, I think, just almost walk their way into speculating in cryptocurrency because they thought, oh, it was a dumb thing. Some people made money, many people didn't.
Okay, that's really interesting. I'll get onto that in just a sec. So, because the other thing I suppose that took off in lockstep during that period of time with COVID, they kind of called people armchair investors, really, because of the fact that we were sort of all locked away, was meme stocks, I suppose. But the difference with those, and maybe the difference they didn't appreciate, was the fact that a stock, as you say, has an intrinsic value. There's something to pin the value of the share price on because it has assets, it has intellectual property, as you say, it has products, as services, whereas they weren't quite aware around cryptos literally just being a difference between how much of an asset there is and the willingness to buy or sell that.
Exactly. And it's quite interesting that you mentioned GameStop, and that it was all part of this really interesting period for the investment world, where GameStop just out of nowhere blew up. Why? Sentiment. But again, at least they had they have physical theaters, they have intellectual property, they have something behind the share price. Bitcoin cryptocurrency just doesn't.
Now, you mentioned about people not making money. Do you think there's far fewer people making money than the people who are losing money?
I think so. This is just like one of those inkling things. I've seen some surveys, but some of these surveys are only of a couple of hundred people and stuff, saying that more people have lost money than they have made. Than they made money investing in crypto or speculating crypto, as I like to say. And I suppose it really does depend on who you ask. I mean, again, I'll go on. So I'll talk about social media again. I've seen posts. Actually, I was speaking to a colleague about this. I've seen posts of people driving a new Tesla and claiming that they were able to buy the Tesla through gains they made by investing in cryptocurrency. And they very much say, yeah, invest in cryptocurrency. This is why I did it. No one can validate that. No one can say that is actually the case. So I think there's a lot of misinformation that are out there, that's out there. I mean, let's be clear. There are people who have made money for sure. I mean, one of my good friends made a decent amount. We're talking probably six figures in crypto, and that's because he invested in Bitcoin back in 2013, but no one heard of Bitcoin. And yeah, he made decent money. He actually ended up selling out of the coin before it peaked during the pandemic, but he still made a significant amount of money. And what he did, he used that money to invest in conventional stocks, or conventional funds, not just stocks but funds, and multi-asset funds. And he also used a portion of that money to buy property. So he's a landlord now, which is great for him. So I'm sure, and we've heard those stories on being reported. So yeah, there are a lot of people who made money, but the thing is, I think from people I've spoken to who invest in cryptocurrencies, is a lot of them were sitting on positive returns on paper, but they didn't necessarily realize it at the right time. So they got in as the asset was going up, and instead of selling as it was going up, they put more and more in, and then because of Bitcoin and cryptocurrency, it's very, very, very volatile by nature. They didn't sell at the right time, and so now a lot of them are nursing paper losses, and a lot of them actually have, from people I've spoken to, have sold out, just saying, what a waste of time. This was a fad. I wish I didn't invest in this.
Okay, so that's a really interesting message here. So you think very much that the amount of money that has been won, some people will have done that, but those who have successfully managed to keep hold of those gains, crystallize the gains, and then do sensible things like roll them into other financial assets or things like property, those people are few and far between. And actually, the big story out there is that there's a lot of people sitting on losses.
Yeah, and it's quite interesting. So during the height of the crypto boom, I think it was around 2020 or 2021, the company I work for, Interactive Investor, we did a survey just to gauge what's going through people's head investing in cryptocurrency, so to speak. I thought, what is going on? Let's commission a survey to see what's going on. And we asked people who invested for the first time what they invested in, and it was something like 45% of people said, of the sample said that their first ever investment was in cryptocurrency. And something like a quarter of the people who said that they took out a loan, or they used a student loan, or they used a credit card to actually fund cryptocurrency investment speculation, which I thought was quite interesting. And now I think back to those people who said that they actually took out a loan and think, well, the borrowing rates have increased because interest rates have gone up quite significantly, hasn't it? It's now at 4.5%. Back then it was at 0.25%. And so it's kind of like, wow, cost of borrowing has gone up. Crypto hasn't really recovered from, such a downfall that it happened after the pandemic. So not only are these people sitting on paper losses, but also they have to repay the money that they invested, right? Because they borrowed the money. So it's actually a scary thought that these people are being hit with a double whammy of crypto losses and also having to find the money to repay the loans that they took out to invest in cryptocurrency,
which is just getting increasingly more expensive. That is a really terrifying thought, actually, because even in the world of more regular investing, where you're investing in, collectives, mutual funds, which is a lot more diversified and risk is a lot more managed, never is the suggestion take out credit in order to go and do that. You never do that, right? you always have 3 to 6 months of cash, and then you use your own money to invest, because the returns that you get from investments are unlikely to be larger than the interest you have to pay anyway on that kind of fast kind of debt. Plus, also, it's just a very risky thing if things go wrong. Correct?
Yeah, exactly. But the thing is, when people are faced with adverts that says, if you're seeing this now it's time to invest in cryptocurrency, now it's time to invest in Bitcoin, a lot of people will think, well, now it's a no-brainer. And I think a lot of people got suckered into doing so because of those kind of adverts.
Because, one of the things, the interesting bits of information that I saw from you was that there are now almost as many people invested in cryptos as there are stocks and shares ISAs, and stocks and shares ISAs have been around a long time. The sensible side of investing has been around a long time. Why have the crypto peeps out there managed to be so successful at bringing people in?
It's what they promise, the potential of higher returns. So cryptocurrency is showing the potential for significant price appreciation in such a short period of time. And some early crypto Bitcoin investors in Bitcoin, for example, experienced significant returns on their investments. Of course, that's not always the case. And so this potential of higher returns, and I suppose in this really awkward investment environment that we find ourselves in, like traditional investments have struggled recently. Like last year was a terrible year for investments. This year, a lot better actually. Most of the major indices are up this year, but it's quite volatile because of what's going on with inflation and interest rates and how that affects investments. With the cost of borrowing going up, not a lot of companies want to invest. It has a macro effect. So a lot of people are thinking, where can I get returns? And they look at cryptocurrency, and some people think, let's take a punt. Yes, we know it's very volatile, but maybe I can get in now, and maybe there's, crypto is due for another boom moment. So some people just want to speculate for potential high returns. And with that, actually, some people might argue that crypto as an asset is over a decade old now, I think. And so some people say, right, it's becoming a little bit more established, understanding what it means to invest in crypto. We understand the behaviors and sentiment towards crypto. So some people might say that it's now teetering towards being an alternative asset like gold is, or like property is. I don't necessarily agree, but some people might argue that. So some people might argue that it might be you might want it to include as part of your portfolio for diversification purposes. So you have the majority of your portfolio invest in stocks and bonds, the whole 60-40 portfolio construction. But instead of, you might cut your weight into stocks and bonds to then add something else, another alternative like property investment, like gold or like crypto, to help prop up the portfolio and to help prop up the performance of the portfolio. So some people might be investing for diversification purposes, and and some people might just believe that crypto is the future. Some people might have faith in blockchain and the use of blockchain as within cryptocurrency as being the future, and want to get in now, while I suppose they think it's relatively reasonably priced at the moment before it explodes again. But whether that's true remains to be seen.
There's talk from regulators of regulating it as a gambling kind of product. Do you agree with that?
It's interesting, isn't it? I've always said, and I've been quoted as saying that speculating crypto is akin to playing the slot machine in the Las Vegas casino. And I want to say I said it first before the MPs said it. I said this back in like 2000. just want to get it out there. It is risky. There's no doubt that it's high risk, and it's only right that the risks are made aware. And I suppose that's why the Financial Conduct Authority, was it this week, or was it this week? I think it was the start of this week, or was it the start of last week, when they announced the measures on cryptocurrency, and firms that sell crypto have to make sure that their customers understand what they're getting themselves into, which I thought was quite interesting. They have to understand what they're getting themselves into. How these firms will prove that their customer base has level of knowledge of crypto products? I don't know. That's anyone's guess, because I think the key question is, what does good look like? What's good appropriate knowledge or level of knowledge on products? We just don't know. But yeah, it's clear that health warnings need to be slapped across all of these crypto products so people just know what they're getting themselves into.
Okay, interesting. So they're going to really tighten up how the marketing of these products is done, and somehow those exchanges are going to need to prove in some way that people understand the risks.
Yeah, I think there's talk actually. I think the FCA said these risk warnings could include statements such as, don't invest unless you're prepared to lose all your money. And this is a high risk investment and you should not expect to be protected if something goes wrong. And also there's a cooling off period. So, and I think it's a 24-hour cooling off period. So people can get their money back within 24 hours if they decide actually it's too risky for me.
Just on the types of people that are buying crypto assets, is it the young?
Do you know what? I think it's people across all ages. I think youngsters are more willing to, well, don't want to say brag, to disclose that they are investing in cryptocurrency. So going back to the research that we did back in 2020, I think it was, the majority of respondents were young people. When I say young people, people aged between 18 and 29, which I think, I'm in my 30s. I still think I'm young. So I think, so when you extend that, so it was people between, I think it was like 70% of people between 18 and 35. The majority said that they invested in cryptocurrency. But when you speak to other people, when you speak to people in the business, when you speak to fund managers privately, they say that, yeah, they have a little bit of cryptocurrency just to see, see how it goes. They always say that they expect to lose money. So when I say they, older adults always tell me that they expect to lose money investing in cryptocurrency, but they don't necessarily see the harm in speculating. And I think that's okay. I don't think there's anything wrong with speculating if you know what you're speculating on. But that's the key. That's the crux of the issue, is people don't necessarily know what they're speculating on.
Okay, so I suppose what I want to know is, you've mentioned it as, some people might want it to be this sort of alternative asset, and could it be as a part of a diversified portfolio? I mean, is there a sensible way of approaching this? You mentioned about being very aware that you're speculating, being prepared to lose money. I mean, is the sensible way to invest in this is to be an amount of money that you're prepared to lose the entire lot? I mean, is that how you should kind of approach it?
Personally, I'll say so. I think if you're investing in cryptocurrency, it shouldn't necessarily be the bulk of your portfolio. Again, it's okay to speculate if you know what you're getting yourself into. So you have to do your research. And investors, it's just like investing one-on-one. Investors should be carefully evaluate their own goals, their own risk tolerance, and understand that the crypto market before making an investment decision. If you have a low risk tolerance, stay away from cryptocurrency. It's just too high risk. Or it depends on your time horizon too. But for me, I don't think crypto should make up anything more than 10% of the average portfolio. When I say average portfolio, these are portfolios that are intended to be invested for at least 5 years before redemptions are made from it. So it's really important to just have a look, just consider your appetite to risk. If the thought of investing in cryptocurrency will keep you awake at night, why bother? And that's the same with any investment.
Okay, final little question for you. Little prediction about the future. Will we see crypto assets on Interactive Investor?
I couldn't possibly comment. I mean, that's a question way above my pay grade. Who knows, Marcus? Who knows? I don't think anyone, who knows? I don't know.
Well, on that note, Myron Jobson, thanks very much.